Welcome, listener, to Audiobook Summary, A Man for All Markets by Edward O. Thorp. This comprehensive audiobook summary of A Man for All Markets, From Las Vegas to Wall Street, How I Beat the Dealer and the Market by Edward O. Thorp. This is the extraordinary tale of a mathematician who transformed the worlds of gambling and finance through sheer intellect, curiosity, and a refusal to accept conventional wisdom. Edward O. Thorp's journey takes us from the hardships of Depression-era Chicago to the glittering casinos of Las Vegas and the high-stakes arena of Wall Street. Over the next 2 hours, we'll dive deep into each chapter, exploring how Thorp's relentless pursuit of knowledge and evidence-based thinking led to groundbreaking innovations in blackjack, roulette, and quantitative investing. His story is not just about beating the odds, but about redefining what's possible through logic and perseverance. So, let's embark on this odyssey of risk, reward, and rational thinking. Chapter 1. Loving to Learn. Our story opens in December 1934 on a chilly Chicago landing, where a 2.5-year-old Edward Thorp stands with his parents, turned away by a landlord who doesn't rent to families with children. Born in 1932 to a working-class family, Thorp grows up in the shadow of the Great Depression. His father, Oakley, a World War I veteran scarred by shrapnel and unfulfilled dreams, sees education as his son's ticket to a better life. Oakley, forced to abandon college due to poverty, pours his hopes into Edward, teaching him to count to 1,000,000 and read far beyond his years. Thorp's brilliance shines early. Silent until nearly 3, he stuns his parents by speaking in complete sentences, as if his mind had been quietly assembling language. At a department store, he shocks his mother's friends, Charlotte and Estelle, by bluntly describing passers-by, revealing an uncanny awareness. By 5, he's devouring Gulliver's Travels and Treasure Island, absorbing tales of adventure that shape his sense of fairness and heroism. His curiosity is relentless. He tests his mother's warning by touching a hot stove, learning through a singed hand, and squeezes eggs to gauge a little bit, stopping just shy of breaking them. Memorizing England's monarchs in order, he earns his father's pride, cementing his identity as a prodigy who questions and verifies. This chapter sets the stage, forging Thorp's defining traits: a love for learning, a skeptic's eye, and a methodical approach to life's mysteries. Chapter 2. Science is my playground. As Thorp grows, the world becomes a laboratory of discoverable rules. A crystal radio set, pulling voices from distant cities through invisible waves, captivates him, revealing the magic of physics governed by logic. He tinkers with gears, pulleys, and simple machines, learning their mechanics through trial and error. To Thorp, science is a playground where every experiment unlocks a piece of the universe's puzzle, fueling his passion for mathematics and physics, disciplines that promise mastery over chaos. His academic journey leads to UCLA, where he earns a BA and MA in physics and a PhD in mathematics by 1958. Largely self-taught, Thorp develops a knack for thinking differently, building mental models to simplify complex systems. Unlike peers who accept conventional wisdom, he challenges assumptions, a trait that sets him apart. The notion that casinos are unbeatable intrigues him, not as a fact, but as a hypothesis to test. He begins to see gambling as a mathematical puzzle, ripe for solving. This chapter traces Thorp's evolution from a curious boy to a rigorous scholar, laying the intellectual foundation for his assault on Las Vegas. Chapter 3. Physics and Mathematics. At UCLA, Thorp sharpens his analytical edge, blending physics and mathematics to tackle problems others deem unsolvable. He thinks in numbers, words, and visual images, but his true gift is modeling reality, like a map that guides through uncharted terrain. This approach distills complexity into clarity, a skill that will define his career. His skepticism of untested beliefs drives him to explore new frontiers, particularly in gambling, where he suspects mathematical flaws might lurk in games like blackjack. Thorp's academic rigor is matched by his willingness to experiment. He studies casino games, hypothesizing that some could be beaten with the right strategy. His ability to bridge theory and practice, turning abstract equations into real-world solutions, sets the stage for his Vegas conquests. This chapter highlights Thorp's intellectual groundwork, where mathematics becomes a weapon to challenge the impossible, foreshadowing his revolutionary impact on gambling. Chapter 4. Las Vegas. In the late 1950s, Thorp turns his gaze to Las Vegas, a neon-lit fortress where chance reigns and the house is king, or so it's believed. Armed with probability theory, he targets blackjack, a game where the deck's composition influences outcomes. He theorizes that tracking cards could shift the odds, a radical idea in an era when casinos are seen as invincible. The challenge excites him, not for the money, but for the chance to prove a mathematical truth. Thorp's early Vegas trips are a heady mix of thrill and tension. At smoky tables, he tests his theories, facing suspicious dealers and glowering pit bosses. His strategies, though unrefined, show promise, and he harnesses early computers to simulate millions of blackjack hands, confirming that card counting, tracking high versus low cards, works. The glittering chaos of Vegas becomes his proving ground, where intellect clashes with the casino's might. This chapter captures the exhilaration of Thorp's first forays, as a young mathematician dares to challenge an empire built on chance. Chapter 5. Conquering Blackjack. Thorp's breakthrough is card counting, a strategy that transforms blackjack into a game of skill. By mentally tracking high cards, tens and aces, versus low cards, players can bet more when the deck favors them. His system is elegantly simple. Start at 0, add 1 for low cards, subtract 1 for high cards, and raise bets when the count is positive. Computer simulations prove it delivers a 1 to 2% edge, enough to tilt the game against the house. Published in Beat the Dealer, 1962, Thorp's findings ignite a firestorm. The book becomes a bestseller, arming amateur players with a weapon to challenge casinos. The industry retaliates, banning card counters, altering rules, and targeting Thorp with chilling intimidation. A poisoning attempt and car sabotage reveal the stakes. Yet, his work democratizes blackjack, proving that brains can outwit brawn. This chapter is a gripping tale of triumph, as Thorp's intellect reshapes an industry, empowering a generation to beat the odds. Chapter 6. The Day of the Lamb. The Day of the Lamb marks a turning point, when casinos realize they're the prey, not the predators. As Beat the Dealer spreads, players flood Las Vegas, wielding Thorp's card-counting strategy. Casinos, desperate to protect their profits, unleash a barrage of countermeasures. Multiple deck shoes, frequent shuffles, and outright cheating with marked cards or rigged deals. Thorp recounts harrowing incidents, like a staged car accident meant to silence him, revealing the dark underbelly of an industry under siege. Despite the dangers, Thorp remains undeterred, refining his methods and sharing them with others. His resilience shines as he navigates a world where his ideas threaten a powerful establishment. This chapter is a tense showdown, pitting Thorp's mathematical precision against the casino's brute force, highlighting the real-world consequences of challenging entrenched systems. Chapter 7. Card Counting for Everyone. Thorp's legacy extends far beyond his own wins. He makes card counting accessible to all. Beat the Dealer offers clear, practical instructions, enabling anyone with discipline to tilt the odds. Thorp shares stories of ordinary people, students, teachers, retirees, who use his system to outsmart casinos, turning weekend trips into profitable ventures. He trains a network of card counters, fostering a community that challenges the industry's dominance. Casinos escalate their defenses, deploying surveillance cameras and blacklists to thwart counters. Thorp reflects on the ethics of his work, insisting he never cheated, only exploited mathematical truths the casinos overlooked. This chapter celebrates the democratization of his ideas, transforming blackjack into a battleground where intellect triumphs. It's a testament to Thorp's impact, while acknowledging the ongoing cat-and-mouse game between players and the house. Chapter 8. Players versus Casinos. The conflict between players and casinos intensifies as Thorp's influence grows. Casinos hire private detectives to stalk tables, identifying card counters with ruthless precision. Thorp, a prime target, resorts to disguises, wigs, fake glasses, altered mannerisms to evade bans. The casino's desperation exposes their vulnerability, as Thorp's system reveals the fragility of their business model, built on the assumption of player ignorance. The psychological toll is palpable. Constant vigilance and the threat of violence test Thorp's resolve, yet his commitment to rational thinking anchors him. He treats each obstacle as a problem to solve, outsmarting casino security with the same logic that cracked blackjack. This chapter is a high-stakes drama, showcasing the relentless battle where intellect clashes with power, and Thorp's ingenuity keeps him one step ahead. Chapter 9. A computer that predicts roulette. Thorp's gambling saga takes a futuristic leap with a collaboration that feels like science fiction. In 1961, he teams up with Claude Shannon, the father of information theory, to build the world's first wearable computer, a device to predict roulette outcomes. By measuring the ball's speed and trajectory, the computer calculates likely landing zones, offering a staggering 40% edge per bet. Worn discreetly, it's a technological marvel in an era of room-sized machines. Their Las Vegas trials are a thrilling blend of triumph and danger. The device works, delivering wins, but casino security grows suspicious, leading to sabotage attempts, including tampered cars. Practical challenges, like unreliable hardware, halt the project, but its success proves Thorp's innovative genius. This chapter is a dazzling mix of cutting-edge science and high-stakes adventure, showcasing Thorp's ability to push boundaries and redefine what's possible. Chapter 10. An edge at other gambling games. Thorp's curiosity refuses to be confined to blackjack and roulette. He explores other casino games, baccarat, keno, and even sports betting, searching for new mathematical edges. Baccarat offers minor opportunities, but its structure limits profitability. Keno proves a dead end, its odds too steep. Sports betting intrigues him, and he applies statistical models to predict outcomes, but finds it less predictable than blackjack's clear probabilities. These experiments yield mixed results, yet each reinforces Thorp's belief that mathematics can uncover hidden advantages. His willingness to explore, even when outcomes are modest, underscores his scientific mindset. Every failure is a lesson, every attempt a step toward truth. This chapter highlights Thorp's relentless drive, setting the stage for his later triumphs in finance, where the same exploratory spirit will conquer even greater markets. Chapter 11. Wall Street, the greatest casino on earth. Edward Thorp's conquest of blackjack was just the beginning. In the mid-1960s, he turns his analytical mind to Wall Street, viewing the stock market as a grander casino, a chaotic arena where probabilities and risks could be tamed with mathematics. His focus lands on warrants, securities that grant the right to buy stock at a fixed price, similar to options. Partnering with economist Sheen Kassouf, Thorp develops a groundbreaking formula to price these instruments, a precursor to the Black-Scholes model that will later revolutionize finance. Their book, Beat the Market, 1967, lays out this strategy, showing how to profit from mispriced warrants while hedging against losses. Thorp's ambitions go beyond theory. In 1969, he founds Princeton Newport Partners, PNP, one of the first market-neutral hedge funds. Using statistical arbitrage, buying undervalued securities and shorting overvalued ones, PNP achieves remarkable returns, averaging 19.1% annually with minimal losses. Thorp's approach is methodical. Identify clear edges, hedge risks, and let the numbers work. This chapter captures the electrifying moment when Thorp brings his gambling-honed skills to finance, proving that markets, like casinos, have exploitable flaws. His vision transforms Wall Street, setting the stage for the quantitative revolution. Chapter 12. Bridge with Buffett. Amid Thorp's financial conquests, a personal connection adds warmth to his story. He forms a friendship with Warren Buffett, a fellow master of calculated risk, through their shared love of bridge. The card game, with its blend of strategy and probability, is a perfect meeting ground. Thorp recounts late-night sessions, where he and Buffett outweed opponents with sharp analysis and silent coordination. He marvels at Buffett's ability to read the table, a skill that mirrors his investment prowess. Their discussions spill into markets, where Thorp admires Buffett's value-driven approach, buying great companies at bargain prices, though it contrasts with Thorp's quantitative models. Buffett's qualitative intuition, rooted in understanding businesses like Coca-Cola, complements Thorp's data-driven arbitrage. This chapter offers a rare glimpse into Thorp's personal life, revealing a man who values intellectual kinship. The parallels between bridge and investing shine through. Both require foresight, discipline, and a cool head. It's a heartfelt interlude, grounding Thorp's larger-than-life achievements in the joy of a well-played game. Chapter 13. Going into Partnership. PNP's success is no solo act. Thorp assembles a team of brilliant minds, mathematicians, programmers, and statisticians, who share his passion for cracking markets. They refine statistical arbitrage, combing through historical stock data to uncover mispricings, then hedging to shield against market swings. Thorp's leadership is a balancing act, fostering innovation while enforcing discipline to ensure strategies are robust. He likens his role to conducting an orchestra, harmonizing diverse talents into a symphony of profits. Managing a growing fund brings challenges. Thorp navigates regulatory scrutiny, team dynamics, and the pressure to maintain PNP's stellar performance. By the 1980s, the fund's assets swell to billions, a testament to its market-neutral approach. This chapter showcases Thorp's evolution from a lone innovator to a visionary leader, building a financial powerhouse while staying true to his mathematical roots. It's a story of collaboration and precision, where Thorp's intellect shapes not just markets, but a team that redefines investing. Chapter 14. Front-running the quantitative revolution. Thorp's work at PNP places him at the forefront of the quantitative revolution, a seismic shift that will transform finance. He pioneers techniques like interest rate swaps and convertible bond arbitrage, outpacing competitors who rely on gut instinct. His most significant contribution is deriving the option pricing formula, later known as Black-Scholes, through plausible reasoning, a feat he achieves years before its academic formalization. Yet, Thorp's name is rarely attached, a quiet frustration in a career marked by underrecognition. He clashes with academic economists like Paul Samuelson, who champion complex theories like utility theory. Thorp prefers simplicity, clear edges, minimal assumptions. His disdain for academic dogma fuels his innovation, as he focuses on practical results over theoretical elegance. This chapter is a deep dive into Thorp's financial breakthroughs, highlighting his ability to anticipate industry trends and challenge entrenched ideas. It's a testament to his foresight, even as the establishment overlooks his genius. Chapter 15. Rise. PNP's ascent is nothing short of spectacular. By the mid-1980s, its assets reach billions, and its performance is the envy of Wall Street. 9% gains in months, with losses so rare they're statistical anomalies. Thorp's strategies, like buying undervalued stocks and hedging with futures, deliver consistent profits. The Kelly criterion, a formula for optimizing bet sizes, is his secret weapon, ensuring PNP's trades maximize growth while minimizing ruin. Clients marvel at PNP's stability, a stark contrast to the market's volatility. Thorp's vision of Wall Street as a casino comes to life, with PNP playing the role of a MasterCard counter. This chapter is a celebration of Thorp's peak, where his mathematical discipline creates a financial juggernaut. It's a thrilling moment, as his ideas reshape investing, proving that rigor and evidence can triumph over chaos. Chapter 16. And Fall. The fall of PNP is a gut punch. In 1987, associates are implicated in insider trading scandals tied to Michael Milken's junk bond empire. Thorp, uninvolved, is blindsided by the betrayal. The legal fallout and media scrutiny erode the fund's reputation, and the stress of managing a sprawling operation takes its toll. In 1988, Thorp makes a wrenching decision to wind down PNP, choosing independence over the corporate grind. His integrity remains untarnished. He avoids the traps that ensnare others, like Bernie Madoff, whose Ponzi scheme Thorp detects years before its 2008 collapse. This chapter is a poignant reminder that even titans face setbacks. Thorp's skepticism and ethical compass guide him through the storm, preserving his legacy. It's a story of resilience, where principles triumph over adversity, even as a dream dissolves. Chapter 17. Period of Adjustment. After PNP's closure, Thorp steps back, embracing a quieter life of personal investments and consulting. He reflects on the toll of running a hedge fund, comparing it to his stint as a math department chair at UC Irvine, which he found more grueling than trading. Yet, his curiosity burns bright. He explores new strategies, like Japanese warrant hedging, adapting his quantitative approach to a smaller scale. This chapter showcases Thorp's adaptability as he navigates a new phase with the same intellectual vigor that defined his career. It's a moment of recalibration where he prioritizes autonomy and reflection. Thorp's ability to pivot without losing his edge underscores his resilience, proving that his drive to learn is as strong as ever, even after monumental achievements. Chapter 18: Swindles and Hazards. Thorp pulls back the curtain on finance's underbelly, exposing swindles that exploit the unwary. He recounts the EMLX hoax of the dot-com era, where hype inflated stock prices, only to crash spectacularly. He warns against high-frequency trading, which schemes profits from retail investors, and toxic order flows that prioritize speed over fairness. His early detection of Madoff's fraud, years before its exposure, highlights his vigilance. By analyzing Madoff's impossibly consistent returns, Thorp spots the red flags others miss. This chapter is a cautionary tale, urging listeners to question claims and trust numbers over promises. Thorp's insistence on verifying evidence saves him from traps, a lesson he imparts with urgency. It's a stark reminder of the hazards lurking in markets, even for a master like Thorp, and a call to navigate finance with eyes wide open. Chapter 19: Buying Low, Selling High. Thorp dives into the mechanics of statistical arbitrage, the engine of PNP's success. By identifying mispriced stocks, buying low, selling high, and hedging risks, he achieves consistent returns. He recounts a challenging period in 1998 when global market volatility tests his models. PNP weathers the storm, posting double-digit gains as markets recover, a feat that foreshadows the strategies of later quant giants like Renaissance Technologies. This chapter is a masterclass in quantitative investing, blending technical depth with gripping storytelling. Thorp's ability to navigate chaos with mathematical precision underscores his genius, offering listeners a window into the mind of a market maestro. It's a testament to discipline and risk management, where data triumphs over emotion, even in the face of uncertainty. Chapter 20: Backing the Truck Up to the Banks. Thorp recounts a blockbuster trade involving savings and loan, S&L, IPOs in the 1980s. As deregulation sparks a wave of S&L conversions to public companies, their shares are undervalued, offering a rare opportunity. PNP snaps them up, hedging with futures to lock in profits. The trade is a classic Thorp maneuver: spot an inefficiency, exploit it with precision, and manage risks meticulously. The returns are substantial, cementing PNP's reputation as a profit machine. This chapter is a thrilling capstone, illustrating Thorp's knack for finding hidden gems in complex markets. It's a reminder that his success stems from logic and evidence, not luck. The vivid imagery of backing the truck up captures the boldness of the trade, while Thorp's disciplined execution grounds the story in his mathematical ethos. Chapter 21: One Last Puff. Edward Thorp's journey through markets takes a reflective turn as he recounts his investment in Berkshire Hathaway, drawn to the genius of Warren Buffett. Their friendship, forged over bridge tables, deepens Thorp's respect for Buffett's value-driven approach. Unlike Thorp's quantitative models, Buffett relies on qualitative insights, buying great companies at fair prices. In the 1980s, Thorp buys Berkshire shares, a decision that proves prescient as the stock soars, turning early investors into millionaires. This chapter is a bridge between Thorp's mathematical precision and Buffett's intuitive wisdom. He marvels at Buffett's ability to spot enduring businesses, like Coca-Cola or American Express, while Thorp's own trades focus on statistical edges. The title, One Last Puff, evokes a final, satisfying draw on a cigar, a nod to the joy of a well-timed investment. Thorp's story here is personal, blending admiration for a peer with the thrill of a bet that pays off spectacularly, reinforcing the power of rational decision-making in any form. Chapter 22: Hedging Your Bets. Hedging, Thorp's cornerstone strategy, takes center stage. At Princeton Newport Partners, PNP, he mastered market-neutral investing, buying undervalued securities while shorting overvalued ones to cancel out market risk. This chapter explains how Thorp's hedges, like pairing convertible bonds with shorted stocks, delivered steady returns regardless of market swings. His use of the Kelly criterion ensured optimal bet sizing, balancing growth with survival. Thorp critiques the hedge fund industry, where high fees, 2% management, 20% profits, often outweigh mediocre performance. He contrasts PNP's disciplined approach with funds that chase trends or take reckless risks. For everyday investors, he advocates simplicity, avoid costly managers, and embrace low-risk strategies. This chapter is a masterclass in risk management, blending technical insights with practical advice, urging listeners to protect their wealth with the same rigor Thorp applied to billions. Chapter 23. How Rich is Rich? Thorp grapples with a profound question. What does it mean to be rich? Having amassed wealth through PNP and savvy investments, he reflects on its purpose. Using mathematical models, he analyzes wealth distribution, noting America's growing inequality. By the 2010s, the top 1% hold more than the bottom 90%. Yet, Thorp concludes that true richness lies not in endless accumulation, but in having enough to live comfortably, pursue passions, and help others. He shares personal anecdotes, like his modest lifestyle despite millions in assets, valuing time with family over ostentatious displays. Thorp contrasts his view with the greed driving Wall Street, where enough is never enough. This chapter is a philosophical pivot, blending data-driven analysis with heartfelt reflection, urging listeners to define wealth on their own terms and prioritize meaning over money. Chapter 24. Compound Growth, the Eighth Wonder of the World. Thorp celebrates compound growth, calling it the eighth wonder of the world. He explains its magic with the rule of 72. Divide 72 by an annual return to estimate doubling time. 7.2% doubles money in 10 years, 10% in 7.2 years. Through vivid examples, like a penny doubling daily for 30 days yielding over $5 million, Thorp illustrates how small, consistent gains snowball over time. He connects this to investing, showing how patient strategies outpace get-rich-quick schemes. Thorp recounts his own success with compounding at PNP, where steady 19% returns built fortunes. For listeners, he emphasizes starting early and staying disciplined, letting time and math do the heavy lifting. This chapter is an inspiring ode to patience, blending mathematical clarity with motivational storytelling to highlight compounding's transformative power. Chapter 25. Beat Most Investors by Indexing. Thorp delivers a clarion call for indexing, arguing it's the best path for most investors. Active managers, with their high fees and inconsistent results, rarely beat the market. Studies show 80 to 90% underperform broad indices over time. Thorp champions low-cost index funds, like Vanguard's VTSAX, which track the S&P 500 or total market, offering diversification and minimal costs. He aligns with Buffett, who bets on index funds for the average investor. Thorp recounts his own shift to indexing for personal investments after PNP, recognizing its simplicity and effectiveness. He debunks the allure of stock picking, citing data on market efficiency and the futility of chasing hot funds. This chapter is a practical guide, empowering listeners to bypass Wall Street's hype and build wealth through disciplined, passive investing. Chapter 26. Can you beat the market? Should you try? Thorp challenges the efficient market hypothesis, which claims all information is priced into stocks, making outperformance impossible. He argues markets are not fully efficient, citing exploitable inefficiencies like SPACs, spin-offs, and merger arbitrage. At PNP, Thorp capitalized on these, using statistical models to find mispriced securities. Yet, he warns that beating the market requires rare skill, discipline, and access to data, qualities most investors lack. For the average person, indexing remains king, but Thorp encourages informed risk-taking for those with an edge. He shares stories of his own bets, like spotting undervalued warrants, balanced by cautionary tales of overconfident traders. This chapter is a nuanced exploration, blending optimism about market opportunities with realism about the challenges, urging listeners to know their limits. Chapter 27. Asset Allocation and Wealth Management. Thorp dives into asset allocation, the art of spreading investments across stocks, bonds, and other assets to balance risk and reward. He advocates diversification, citing PNP's market-neutral strategies as a model for reducing volatility. For individuals, he suggests a mix tailored to age and goals. Younger investors can lean heavily on stocks for growth, while older ones add bonds for stability. He critiques overvalued assets, like residential real estate in the 2000s, driven by speculation rather than fundamentals. Thorp shares his own allocation, favoring index funds and occasional opportunistic bets. This chapter is a practical roadmap, blending quantitative insights with accessible advice, helping listeners build robust portfolios that weather market storms. Chapter 28, Giving Back. Thorp's wealth finds purpose in philanthropy, reflecting his commitment to education and science. He endows a mathematics chair at UC Irvine, ensuring future generations benefit from rigorous training. Collaborating with Bond King Bill Gross, he supports research in physics and medicine, channeling profits into societal good. Thorp's giving is deliberate, guided by the same analytical rigor as his investments. Maximize impact, minimize waste. He reflects on the joy of giving, contrasting it with the hollow pursuit of status through wealth. Stories of students and researchers aided by his grants add a personal touch, showing Thorp's legacy extending beyond markets. This chapter is heartwarming, showcasing a man whose intellect serves not just himself, but humanity, inspiring listeners to consider their own contributions. Chapter 29, Financial Crises, Lessons Not Learned. Thorp turns a critical eye to financial crises, from the 1929 crash to the 2008 meltdown. He blames unchecked speculation, complex derivatives, and regulatory failures. In 2008, mortgage-backed securities, bundled loans sliced into opaque tranches, collapsed, costing taxpayers $700 billion in bailouts. Thorp critiques economists' inability to predict these disasters, citing their reliance on flawed models like the capital asset pricing model, which ignore real-world messiness. He recounts his own navigation of crises, avoiding losses through hedging and skepticism. Thorp warns that lessons go unheeded. By 2016, derivatives markets remain bloated, risking future collapses. This chapter is a sobering critique, blending historical analysis with forward-looking concern, urging simpler, transparent systems to protect society from financial hubris. Chapter 30, Thoughts. In his final chapter, Thorp distills a lifetime of wisdom. He emphasizes rational thinking, drawing on Charles Munger's advice to think long-term and act fairly. Thorp reflects on his journey, from a Depression-era kid to a market pioneer, crediting persistence, skepticism, and evidence-based decisions. He urges listeners to verify claims, avoid emotional traps, and embrace simplicity in investing and life. Thorp shares personal values, like integrity and curiosity, shaped by early lessons from his father and books like Treasure Island. He critiques society's obsession with short-term gains, advocating for sustainable systems. This chapter is a philosophical capstone, blending practical advice with moral clarity, inspiring listeners to apply Thorp's principles to their own challenges. Conclusion. A Man for All Markets is a masterclass in thinking differently. Edward Thorp's journey, from a curious child to a pioneer in gambling and finance, shows how intellect, skepticism, and discipline can reshape industries. His innovations in blackjack, roulette, and quantitative investing, grounded in the Kelly criterion, demonstrate the power of evidence-based decision-making. Thorp's life inspires us to challenge assumptions, manage risks, and pursue knowledge relentlessly. Whether you're an investor, a gambler, or simply navigating life's uncertainties, Thorp's story offers timeless wisdom. Thank you for joining this deep dive into A Man for All Markets. May it inspire you to find your own edge in the markets of life.